Hey there, everyone. Today, we are diving into the world of stock market analysis and exploring a fascinating phenomenon that's unfolding right now. The FBM KLCI, a key Malaysian index, is currently in a bit of a holding pattern, and I want to break down why this is happening and what it could mean for investors and traders alike. So, let's start with the basics. The KLCI is flat, barely budging from its opening bell, and this lack of movement is intriguing. You see, when markets are stagnant like this, it often indicates a search for direction, a pause before the next big move. And in this case, the lack of new catalysts is a key factor. Now, here's where it gets interesting. The US jobs report for July has had an impact on global markets. A weaker-than-expected report has eased inflation fears, which is good news for those worried about a hawkish Federation. But, and this is a big but, a deteriorating labor market could shift the focus from inflation to economic growth concerns. It's a delicate balance, and one that traders are watching closely. Another factor at play is the ongoing conflict in the Strait of Hormuz. This geopolitical tension is a wild card, and it's keeping everyone on edge. Tehran's stance on direct talks with the US is a key variable here, and it could have a significant impact on market sentiment. Technically speaking, the FBM KLCI has been trending downwards since January, and the recent pullback has formed a bearish signal. Apex Securities predicts a weaker week ahead, with immediate support at 1,735 and potential further declines to 1,700 if profit-taking kicks in. However, there's some interesting movement in semiconductor-related stocks. Pentamaster, SAM Engineering, and Frontken are all seeing buying interest, which could be a sign of a sector-specific rebound. So, what does this all mean? Well, personally, I think this stagnation is a sign of caution in the market. Traders are waiting for clearer signals, and the lack of movement suggests a sense of uncertainty. The US jobs report has provided some relief, but the broader economic picture is still a bit hazy. In my opinion, the key takeaway here is that markets are complex and interconnected. A weak jobs report in the US can impact markets globally, and geopolitical tensions can overshadow even the most promising sectors. It's a reminder that investing is not just about numbers, but about understanding the bigger picture and the myriad factors that influence market movements. So, as we wrap up, I want to leave you with this thought: investing is an art, and sometimes, the most profitable moves are the ones you make when you're patient and well-informed. Stay tuned, and we'll continue to explore these fascinating market dynamics together.